Bonus depreciation is back. It was phasing down. We were looking at 20%, whatever that means. Don't worry, I'll explain it. But the One Big Beautiful Bill Act changed everything, and now it's back at 100% permanently. And here's what that means. So most entrepreneurs get frustrated by depreciation because it's really just a made-up accounting rule, and there are reasons that it exists, and it sort of kind of makes sense, but when it comes to actually running our business, it can create some challenges for us. So here's the general idea. If I buy something for my business and I pay cash for that, I want to be able to write that off all in the first year when I spent that money. But for certain assets, real estate, equipment, vehicles, even sometimes computers and technology and things like that, the folks who make up the accounting rules have said, well, if you buy an asset for your business, even though you spent all that money in the first year, the reality is that item has a useful life. So if you buy a piece of real estate, we're going to say that the life of that asset is like 27 and a half years. Or if you buy a piece of equipment, we're going to say that life is 5 years. And you're allowed to take a little bit of the total purchase price and deduct it every single year over the life of that item. So it's frustrating for us as business owners because it's like, I incurred that expense, I want to take that deduction, but instead I'm going to end up paying higher taxes every single year until this thing is fully depreciated. So it's kind of a made-up rule. It also sort of makes sense, though, because it normalizes the income and the expenses of a business. So a business that took a lot of deductions, if they bought equipment, it may distort the financial reality of that business. It may make the business look less healthy than it really is. But for business owners, what we're really concerned about is investing money properly in our business and minimizing our tax bill and maximizing our cash flow. So this is the beauty of bonus depreciation, is it says there are certain items that if you buy them, instead of forcing you to depreciate them over 5 years or 7 years or maybe even 10 years, we're going to allow you to take this full deduction in year one. So one of the common areas where you hear people talk about this is when it comes to buying vehicles. Typically, if you buy a vehicle and it's an expense for your business, you may only be able to spread those deductions out over 5 years. But in certain instances, if you buy a vehicle that's over 6,000 pounds and you use it completely for the business, you can write off 100% of that expense in year one. That's really great. The other area where bonus depreciation is really common is when it comes to buying machinery and equipment. So if you go out and buy a really expensive piece of equipment for your business and you can write that off all in the first year, that's huge tax savings now versus a little bit of tax savings every year over the life of that item. And the One Big Beautiful Bill Act brought this back. Now, here's the cool thing. You have the choice as a business owner. You don't have to take bonus depreciation. Maybe you do want to defer the benefits of taking those deductions over the life of the asset, and that's fine. But if you want to minimize your tax burden now and keep more of your cash now, this can be a really great option for business owners. And the nice thing is, we had some concerns about bonus depreciation previously. This is something that they really brought in heavily back with the 2017 Tax Cuts and Jobs Act. And initially, it was 100%. You could write off 100% of that item in the first year, that asset, that equipment, that machinery, whatever it is. And then over time, that 100% went down. So in 2023, you could write off 80%. That was the year we bought our airplanes. We were able to write off 80% of the cost of our airplane that year, which was really great. And then in 2024, it went down to 60%. In 2025, it went down to 40%. But the One Big Beautiful Bill Act has brought this back at 100%. This is a huge benefit for business owners if they choose to take advantage of it. So you can understand how some businesses would take advantage of bonus depreciation. If you own a factory and you manufacture things, buying equipment and tools and machinery, it's pretty easy to take advantage of bonus depreciation. But what if you're in a business that doesn't have a lot of machinery and equipment? Take a law firm, for example. We've got some computers, we've got some desks, but it's not like we're going out and buying a hydraulic press or a plastic injection molding machine. So how can we take advantage of this? Well, with some of our law firm clients, for example, we'll actually help them set up an equipment leasing business so they can go out and buy bulldozers or dump trucks or excavators, and they can make these items available for rental. So it's nice because you can generate some income to offset the expenses that you're incurring, but you get to take all of that depreciation right now to offset your income from your primary business, like a law firm. So yeah, this is a little complex. It requires basically establishing an entirely new business, but the tax benefits of this can be massive. So that's a creative way to take advantage of bonus depreciation. Another area where we see this quite often is with real estate. The useful life is pretty long, usually 27 and a half years or even longer than that. So if you're going to buy $1 million piece of property, you can write off like a couple percent of that every year for 27.5 years. The tax benefits aren't real great there. But you can do something that's called a cost segregation study. And with this, you have an engineer come in and they go around your building or your real estate and they say, okay, well, yeah, there's land here and there's trees here, dirt and things like that. But you've also got a building, and in that building, you have certain items. Some of them are going to have a much shorter useful life. So a cost segregation study comes in and says, well, you've got some property that's got a 5-year life and some property that's got a 7-year life. So now we're depreciating those assets a lot more quickly than 27.5 years. But now with bonus depreciation, there's going to be a lot of items on that list or in your building or on your real estate that you can take bonus depreciation on and write it off completely right now. So that's a huge tax benefit. Now let's factor in the cash flow benefits of this. You know, if you're going to buy a piece of real estate, you don't have to have all of that cash sitting in the bank. You can put down 10 or 15 or 20% to buy a piece of real estate and make your payments over the series of 20 or 30 years, however long you finance this thing. But you can front load so many of those expenses. So in some instances with a cost segregation study, you can take a deduction on your taxes that's more than the amount that you put down as a down payment. Of course, it depends on the specifics of the property and exactly what your investment is and exactly what this property is used for. But that's part of the calculus in deciding what type of real estate investment you're going to make. And that's what tax benefits can I get from this? So for example, if you were going to go and buy a single family home piece of residential real estate, there's going to be some items that you can take bonus depreciation on and some items that you can depreciate over 5 and 7 years. But compare that to something like a self-storage facility, which has a lot of garage doors and a lot of items that have a shorter useful life. The cost segregation study may have a lot more benefits for an investment like that versus, say, a single family home that you make available for rental. There's some other rules to follow with taking these depreciation benefits on your taxes, and it depends on how much you work in the business and whether you're a real estate professional, and that's got a very specific definition under the tax code, and we'll do some other videos on that. But the point is, this is another opportunity where a change to the law, where they brought back bonus depreciation, now gives you more options as a business owner to either follow the rules as they were originally written or take advantage of some of these new opportunities. And it's part of that calculation of deciding which approach you want to take to see how it's going to affect your tax bill. So the question isn't really whether you should use bonus depreciation. That's something that you talk to a tax strategist about. But if you have bought any assets in 2025, even before you file your taxes on April 15th, you can decide whether they're eligible for bonus depreciation and still elect to do that on your taxes, even though you didn't make the decision before December 31st. You did have to buy the item before December 31st. And now in 2026, if you're buying equipment or assets, or you want to explore some of these other opportunities, there's a lot of time left in the year to run your calculations and underwrite some of these deals to see what the tax benefits can actually be. It's important in either instance, though, to talk to your accountant because you have a choice of how you account for these things on your taxes, and you can make it a strategic decision about how these items show up on your tax returns. So for more extraordinary and necessary tax advice, make sure you like and subscribe.